Hello, everyone. This is Alexander Horat with the Free American Press, and today we're joined back by a great guest, Steve Barton with In It to Win It. He provides a lot of investment analysis and talks about gold and silver, among other commodities. Hello, Steve. Thank you for coming back on the show.
Thanks for having me, Alex. I appreciate it.
Yeah, so for my first question, I want to get your take on this. What do you think will be the best performing commodity, monetarily wise, of 2026?
That's a good question. I would probably say I like copper a lot. Oil I like as well. There's an oddball play right now that no one's talking about, and that is actually nickel. And so what's happened fundamentally with nickel is about 60 or 65% of the world's supply of nickel comes from Indonesia and the Philippines. It's lateritic nickel, which is very how can I describe it? It's basically like difficult to process. It's very capital intensive, and it's kind of dirty, right? Well, what Indonesia has been doing is they've kind of been sidestepping what most people would consider like average environmental standards, and they've simply just been washing the tailings into the ocean and destroying their forests. I think the Indonesian people have finally had enough of that. And so the government has finally responded saying that they're going to decrease nickel output for 2026. I've heard as much as 30%. Some are saying a little bit higher, but suffice it to say, it looks like Indonesia is going to start curbing some of their exports of nickel. Right now, we're in a nickel surplus. If they can curb those exports, we're going to be coming into a nickel deficit, which, supply demand dynamics, less supply, same increasing demand, then we should have a re-rating here, I think, in the price. As the price comes up in nickel, that's going to incentivize other nickel miners around the world that have essentially been put out of business in the last half a decade because nickel prices were so suppressed they couldn't do it profitably. I believe that a lot of the sulfide nickel miners around the world are going to actually say, hey, these numbers work now, and now we can do it profitably since Indonesia is having to clean up their act. So I'm pretty excited about some select sulfide nickel miners in the West and other parts of the world other than Indonesia. So if I had to pick one for 2026, I think I'd probably pick nickel.
So, how much of the market does Indonesia control?
They control about 60 to 65%. That's how much.
Mhm.
So a lot, well over half, about 2 out of every 3 pounds of nickel that enter the global market comes from Indonesia.
Wow. So you'd say nickel is at a low price right now, or is it just if they stop shipping it out of to Indonesia, then that's going to cause it to surge?
Yeah, it's at a very low cost right now. Here, I can share my screen and I'll show you the nickel chart. And we've had a small little re-rating here on the nickel price. Let me make this a line chart and it'll be a little easier to see. So pay attention to the yellow line right here. See how it
Okay.
was just flattened? It just kind of looked like the EKG of a dying person. And then boom, we've had this little blip right here. That's the response to the Indonesian government saying that they're going to increase or they're going to decrease the output of nickel. So the price has surged a little bit. I think we got a long way to go on this one. We had quite, you're familiar with commodity charts. They can have some blow off tops here. And I think we're just starting to see the pulse of one here in the nickel market.
So, for the viewers that don't know, could you please tell us what the primary use of nickel is?
Most of it is going to be for things like making sure that metals don't get degraded by oxidation. So, like chrome. Okay, so for preserving, metals is the primary purpose. There's also an increasing amount of usage in it in batteries and nickel batteries, and specifically like electric vehicles. So I'm not a huge fan of electric vehicles, but it looks like there is a rise of them coming. But that isn't the base case of my bet. The base case of my bet is Indonesia, reducing their output, thereby decreasing supply, and with stable demand, the price should go up. And we've just started to see a blip of this. I mean, as a technician, This is a loosely formed bull flag here, which is a bullish formation. I would say about 65, 70% of the time. This continues to go up. If I was just looking at this as a chart and didn't know anything about what chart I was looking at, 7 out of 10 times this is going to go higher.
Yeah, and I think, correct me if I'm wrong, but I think also nickel is a war metal, highly used in war. That's true, isn't it?
I don't know. I haven't researched that part, but it very well could be.
Yeah, well, that's awesome to know that nickel's a good investment. So how are you investing in nickel? Are you getting physical nickel or are you buying a miner stock? How can people get in a position in this?
I would say the easiest way for most people to play nickel is simply this ETF. It's
Okay.
NIKL. It's the Nickel Miners ETF, and this is just an ETF of a bunch of nickel miners. And the problem with this ETF is a lot of it is based out of Indonesia, which isn't really like isn't where I would want to put my money. I would rather put my money outside of Indonesia where they're not going to be under those restrictions. And with my premium guys, I've got a couple of select companies that I think are going to do really well. But if you want to play beta nickel, I think this is an easy way to do it, and I think this ETF will do fine. I just don't think it'll make as much as specific nickel miners that might turn on their production if I'm right and the price continues to move up.
Yeah, that's definitely important to know. So what's your favorite stock coming into 2026? Which stock do you think would be the best one for investing in?
Well, it depends on what you want. If you just want to, have a little bit more safety, I would say maybe something like Franco-Nevada or Royal Gold. I would be pretty surprised if those aren't up 50% a year from now. If you want a little more risk in it, there's one company that I like a lot. And have you heard of Seabridge Gold?
No.
Okay, Seabridge Gold is a giant deposit up in British Columbia, Canada. They have something like 50 billion pounds of copper in the ground and some ridiculous amount of gold in the ground. This deposit has been worked on by a man named Rudy Frank for 26 years. He's the CEO, and he's getting older, and he's ready to get a joint venture, get a JV with a big miner to take over this KSM deposit. That's his biggest deposit on the land. And there's only probably one miner on the planet that is already operating in the area that is a potential candidate to take this over, and that would be Newmont.
Mhm.
Apparently, Rudy is in talks right now with one potential partner of who could take this over, although he's not saying it's Newmont. I got to believe that it is Newmont, right? It's the only one that logically makes sense. I've asked Rick Rule about this. He thinks the same thing, so I think I'm on track here. Now, if this JV deal goes through, that company Seabridge, they're trading at maybe 35 bucks a share right now. I think if that deal goes through within a few days, they're probably going to be up at 60 bucks. So that's a pretty nice way to play it. An even more leveraged way to play it, and this is where the risk comes in, is there's a little unknown company that has a royalty on that KSM deposit that Rudy is actively trying to get a JV deal done with Newmont right now.
Mhm.
So my thought is once, if, I should say if, not once, if a deal goes through and Rudy can get a deal done with Newmont to get a joint venture going on the KSM deposit, I think that will start a lot of analysts researching this and then finding out that, hey, have you guys seen that this nation's royalty company has a royalty on the KSM deposit? Seabridge Gold is worth, I don't know, 3 or 4 billion. And this little unknown royalty company is worth like 200 million. So if that deal goes through, it may take a few weeks for people to kind of realize what's happened. But I think that thing could be an absolute just gangbusters bet. And, you might get a double out of Seabridge by simply buying shares. You could buy call options on Seabridge to get a little leverage there. But the problem with that is you have an expiration date. And so you could be right about a JV deal going through, but if your call options expire in December and it happens in January of next year, you were still wrong. This company is a way to essentially have a call option on that deal getting done, and that call option never expires. So those are a few bets for you. I think the safe ones would be like Franco Nevada, Royal Gold, and then the lottery ticket. That could be, if no deal gets done, I see the share price of Nations Royalty probably going flat to down. And if a deal gets done, who knows? You know what I mean? It is such a small company, and so the beauty of it is so few shares are actually free float available to retail. So
Hmm.
all it takes is a couple of wealthy guys that don't understand that, or maybe they even misclick and they put market order instead of limit order, and the stock is going to explode. So
Wow.
those are a few picks that I like for
And
this
it's
year.
Seabridge Gold.
Seabridge Gold is the one that has the KSM deposit, the big deposit, and then Nations Royalty is the one that has a royalty on the KSM deposit. So that royalty isn't really worth a whole lot until someone can develop that mine and start producing money, and then they get their royalty, right? But in
Right.
the meantime, they have a royalty on, well, once it goes, it's the biggest permitted gold and copper mine on the planet, to my knowledge.
Yeah, so is Rick Rule an investor in Seabridge Gold and Nation Royalty?
I know he has nations. I'm pretty sure he has Seabridge. I would be shocked if he didn't. Yeah.
Oh, okay. Well, that's good to know. Sounds like a could be a good play. So you talked about other commodities. You said you like copper and oil. I was thinking we could move on to oil. First, the geopolitical question before we begin. Do you think there is going to be war with Iran? A lot of analysts are predicting that, but then there's some people that think that's probably not going to actually happen. And if so, what does that mean for oil?
Well, I'm certainly no analyst in that, but I would guess that the amount of troops and everything we have over there, I think there is going to be some kind of kinetic conflict. When we go back and look at oil, whenever there is some type of conflict like that, usually oil has a spike. Here's the last time we had a little hiccup with Iran, and they threatened to close the Strait of Hormuz, and oil went from $63 a barrel up to almost 80, and then pretty much collapsed right back down like nothing happened, right? I could see something like that happening here. Maybe. The charts are definitely pointing to higher oil prices. So this is a pretty bullish pattern. We've broken up above this 200-day moving average. This is WTI. And now we're trading towards the upper part of this parallel channel that's been in place now since September of 2023. So it's a pretty reliable channel here. Basically, whenever it hits the bottom of it, it goes back up and hits the top and then comes back down. And I think we're going to go up and test this top, and I think we're actually going to break out. So yeah, I'm pretty bullish on oil. Oil equities, on the other hand, have had a really nice run. I'll pull up XLE right here, and if you're familiar with my show, I like to put in these red, yellow, and green lines, and basically saying like, this is an okay time to buy. This is an okay time to buy. This is a really good deal down here. Like once it gets into the green, and so we're pretty far away from what I think is a pretty good deal right now in oil equities. The time to be buying these things was back down here when it was bouncing off the 200-day moving average and no one was talking about it. Now it's getting a little into the getting kind of hot up here, getting kind of heated. I think we could have a little bit of a rollover here in oil equities. I guess the caveat is if something happens in the Middle East, that could be some more fire to put underneath them. But for the intermediate term, for the short term, I see higher WTI and Brent spot oil, and I see cheaper prices in oil equities.
Okay, so what do you think is the best way to get a position in oil right now? Which oil companies do you like? And specifically, do you like Chevron or not really?
I don't own Chevron, although I'm certainly not opposed to owning it. I think this is the easiest beta way to play it right here is XLE. Like just about anyone can buy this ETF. It has the two biggest oil companies in it in the biggest positions. It's got Exxon is the biggest position, and the second biggest position is Chevron. So I guess I do own Chevron because I own XLE. I like that one, and then my number one oil pick would be ExxonMobil.
Okay, ExxonMobil. Yeah, I
But
have
not
heard.
now. I was actually thinking of buying puts on this. Like when we go here to the weekly chart, that's in technical analysis what we call a topping tail right there where the circle is. That is a very, very bearish looking candle or bar. Until we can clear the price action going up higher than this and closing above it, this is forecasting that the price is going to come down. And I think that's exactly what will happen. There is another case too where, maybe we're just doing bullish consolidation here where we move sideways before we move higher, but I don't think so. My base case is here. I think that oil equities will get a little cheaper. So for, like this XLE ETF, I wouldn't be a buyer until it comes down here to 49 bucks. We're up at 55 now.
So at what point, what price would you sell your oil?
Nowhere near now. We still need the thesis to play out. Basically, oil companies have underinvested in exploration. So the oil price hasn't been high enough for them to have extra cash to go out and look for more. So the way all these commodities work is once you pull it out of the ground and sell it, your asset is literally getting smaller and smaller and your company is becoming worth less and less and less. And that's what a lot of these oil companies have been doing for years now, is the oil price has been just creeping lower and lower and lower. And so they haven't had that extra cash to be able to go out there and say like, hey guys, we need to look for more oil because we're literally using up all of it, every day as we speak. We need to go out and look for more. So until they start doing that and start getting, increasing their reserves and, basically what they have on the books, the bet is still on. And, I see it's probably going to get somewhere up around 85, 90. I mean, there's a lot of resistance here on the charts around 85 or 90. So that would be kind of my base case, like at least getting there before I'm even entertaining selling. But there are moments too. I mean, like I bought oil back down here when it went negative, and then I sold it up here around 115. And there wasn't anything that I could really see fundamentally that drove the price up that high. But on the charts, I mean, everything was just screaming it was a sell. So I sold. If something like that happens, I'm certainly not opposed to selling, but I don't see anything like that happening over the next like 3 years.
So as you know, there was the leader of Venezuela was taken by the U.S. government. Do you think the United States will start getting oil from Venezuela? And how do you think that'll affect the oil market if they start getting oil from them?
No, I don't think we will. Venezuela oil, not all oil is created equal. So like WTI, the stuff we get out of the Permian Basin is what's called light sweet crude oil. And so what that means is there's a lot less refining. It doesn't have all the sulfur content. The oil that we have down in Venezuela is heavy sour crude. So it's got a lot of sulfur in it. Think of it as more like the difference between like the oil you pour in your car is WTI, and then like asphalt is what they have down in Venezuela, right? It's real tarry. It takes a lot of refining. The situation down in Brazil, simply because we took out Maduro. I'm sorry, the situation down in Venezuela, simply because we took out Maduro, nothing's really changed. You still have their entire corrupt government. They've still been printing away and creating hyperinflation. I mean, imagine that you're an employee working for Exxon or Chevron, and your boss says, hey, pack up your family. You're going down to Venezuela for the next 3 years so that we can start building out the infrastructure to get all the oil that's coming out of there. You're like, forget that. I ain't doing that. There's a bunch of cartel down there and it's dangerous. I mean, they have an enormous security issue that they have to solve before they can take anything out of that country. And I just don't see that happening.
Okay, yeah, I agree that the regime hasn't been changed, like they said, since they have the vice president as the leader over there. So we'll see if things actually start to change there, for sure. But now that we talked about oil, you mentioned copper as one of your favorite commodities. If we could talk about that and what you see it going to by the end of this year.
Not sure about the end of this year, but this is my general theme on the copper market. I've been investing in copper now for about 3 years or so. You can take a look at this white trend line right here. Pretty much, this goes back to July of 2022. You can basically see that if you simply bought copper anytime the price action got around that white line, you're in the black and you're having a good time. So that's my base case right now as far as having entry points into copper is if we ever get back down to this white line, that's the time to buy. Other than that, I would say another good time to buy is around this 200-day moving average, which is right now sitting at $5.17. So if the price got down to there, short term, what I see in copper here is I see a little bit of consolidation kind of to the downside. So I think in the intermediate term, in the short term, we're probably going sideways to lower in copper. See, we were in an uptrend back here in August of 2025. And then since it's just kind of leveled out and gone down, I'm not looking at the individual days here. I'm looking at the general trend, and the general trend has rolled over. We can tell that by this 20-day moving average and this 50-day moving average. The 20 is just about ready to cross over here on the 50, indicating a change in direction, and it's probably going to roll over. So if you miss the copper move, I think you're going to get a second chance. And I think copper is going to basically be going sideways to down. I would be looking to pick some up, like as this 200 moving average comes up, you might be able to catch some as the price action gets around there. And if we get lucky and we get a pretty radical sell-off, then I would be looking at this white line right here. And that's really as scientific as I've gotten with copper. Here's the COPX ETF. And every one of these little green lines right here is when the spot price of copper hit that white line. Okay. That's as sophisticated as I've gotten on this thing, and it's just printed money. So that's how I would treat copper, and so far that system has worked, and I would continue to, unless something changes with copper, but I mean, we're on track to use 2% more copper every single year, and we're not getting a plethora of copper mines. What's happened is big companies are buying up small companies, but then that's not actually adding to the global supply. They're just consolidating. We need to have a huge mine come online every single year to solve this deficit, and it's just not happening. So, long term, I like copper a lot. Short term, I think we got a little weakness.
Okay, so what's your favorite copper companies, or do you like having copper in physical form?
No, I don't stack copper. I'd say the easiest beta way to play this is this one right here, COPX. Just about anyone can buy this thing. There is a physical fund out there that trades copper. Sprott has one, COP.U. They were trading at a pretty radical discount of around 20%. Not too long ago, myself and my subscribers jumped on that one. And anyways, there's not much of a discount anymore. I think there's probably some fund manager that figured that game out and closed the window real quick. So I'm not in that one anymore. But it was a nice arbitrage when they had it.
Yeah.
But then it re-rated and I sold. As far as copper companies, I mean, if you want to just play the beta, you could get Freeport. You want a little more risk, you could go Ivanhoe Mines. There's also some nice copper royalties out there. I mean, even some of the big guys, like Royal Gold, they have some copper in their assets. But beta way right here, COPX. This one will do fine.
Okay, so the next commodity that I wanted to ask you about was uranium. Lately, I've had an analyst came up on the show and he said uranium was a very good buy right now. So I just want to get your thoughts on that as well.
Uranium, yeah. So one important thing to know about uranium is there's two sets of prices. There's the spot price, which is this chart right here. Let me make it a line so you can actually see it. There we go. The yellow line. That's the spot price of uranium right now. Today, it's at $87.45. Term contracts, that basically means what is the price of uranium going out 12 months or longer. So if a utility says, hey, we're going to need 100,000 pounds a year from now, what's the price? The minimum price that was signed last month was $89 a pound. The maximum price, we don't know, but we know that's the minimum price. So this kind of gives us a little forecast into the future. And right now, spot and term is about the same price, so I don't really see any arbitrage right there, although I do believe that the term price is going to continue climbing. We'll find out at the end of the month what the next month's contracts are going to be, or what the contracts were for February. We'll find out beginning of March, but right now that's it. The deal that I saw was way back here when the spot price was down around $65, and the term price at that time was 81. Okay, so you can literally see the future that the cheapest price was 81 and is selling for 65 right now. That's a deal. All right. Okay. If you have the patience to wait out a year, and lo and behold, look what happened. The price has gone up. This is the way I like to play it. This is the Sprott Physical Uranium Trust. And so basically what I do is I pay attention to those pricings, and I simply buy when there's a discount and when it's cheap, and I sell when it's expensive. We had a nice run up right here. So red arrows are exit points. And I suppose now it looks a little like we're psychic, but all that happened was we just had a blow off top. So we took profits and sold. And then just a week or so later, we got back in and bought. Now, short term, I think this is going lower. The reason is because as a technical analyst, I can't help but see that there is a bear flag right here. And it just broke below a pivotal 50-day moving average right here, right? So you see that kind of middling blue line right there. It broke and closed yesterday below it, and it broke, and it looks like we're going to close today, Friday, below it. That kind of means look out below. So I think you can get uranium cheaper coming up here in the short term. The levels that I would be looking at on SRUUF would be this one, 1875 right here. And I'd be looking down here around 1775. If we just want to go straight technical on this, we can take the top and we go down to the bottom here of the pole and we project this out to where the breakout is. And this could drop all the way down here to 15 bucks. Now, what I know about the fundamentals, I don't think that's going to happen. I think we may get down in here to the 200-day moving average, although this thing is very, very volatile. So I suppose anything's possible. But my short-term bias here for uranium is lower. Here is the URNM, same kind of bear flag pattern, right? See, so we got this. It hasn't quite broken to the downside yet, but if the physical market has, I think this is going to soon follow, and I think we'll get lucky, and I think we're going to hit these yellow and green lines. So long term, I am a long-term bull on uranium. Short term, this has been one of my most favorite to trade because it's so volatile. You can make a lot of money really quick on uranium. I mean, here's the past one. So green arrows are entries, right? Reds are exits. And just buying this stuff when no one's talking about it and it's hated, 103% move, sell it. Accumulate, 145% move, right? Like you have these violent swings to the upside and the downside. And another reason I think this is going to move down is because we're getting, when you look at the S&P 500, when you look at like the Dow and a lot of these other major indices that the average retail and fund managers are buying into, it looks to me like those are about to roll over. Usually uranium rolls over with the general market. Unless you have some kind of bullish news at that moment when the stock market is going down, uranium's coming down with it. And it looks to me like the stock market's coming down. So not only do we have the a great bear flag here across many, many uranium equities, we also have the general market selling off. So I think what happens is when people see that they're losing money in their stock market, they just sell whatever they got. And uranium gets whacked and it gets hit on the list. And that's when we buy again and we rinse and repeat and we, sell the peaks.
Yeah, so for people wanting to get into uranium, you said the Sprott Physical Uranium Trust is a good way. Would you say that's the best way?
Depends on what you want. It's the safest way, if there is such a safe thing as a uranium bet. It's the safest way to play it. And when I say safe, I mean, look at the volatility of this thing. Like if that looks safe to you, then take that for what it's worth. This one's even more volatile, URNM. I think either one of these are good. Like this one for URNM, I like limit order there at 66, 60 bucks, and then 55. I really like that 55 one. I really hope this gets a washout and we can get an entry right there on the 200-day moving average. I think that would be a slam dunk entry and one that I've taken many times, and you just rinse and repeat, and yeah, this is a fun market. It can be very profitable if you have the discipline to buy when everyone's saying that the thesis is broken and to sell when everyone is saying that uranium's going to the moon.
So what do you think of the company Uranium Royalty?
I like that one. I like it a lot.
Okay.
I do own Uranium Royalty. We've got it in the premium portfolio. It's been an amazing performer. One thing you got to remember, I'll just pull it up on the chart here, is that you got to do the same thing. You got to buy when it's hated, and you got to be willing to push the sell button when it's not. So back down here, when on Liberation Day, when Trump was holding up his chalkboard, doing all the tariffs and, and tariffing an island full of penguins, that's when you got to buy. It was $1.50, right? The position I have in this one is now free because I've sold enough to where I have a zero cost basis. But same kind of pattern here on Uranium Royalty Corporation is we've got a bear flag. We're sitting right here on the 50-day moving average, and it looks to me like we're going to break below it. So if that's the case, look out below. We're probably going to hit at least this 200-day moving average, and we might get even cheaper.
Okay, well, thanks for providing your insight on uranium. I guess we should move into the big one, and that's gold and silver. I guess we could talk about silver first, then gold. I know there's been a few people like Rick Rule who sold a decent amount of his silver, and I hear a couple analysts saying that silver may go into the 50s. So I just want to hear your opinion. Right now, silver's on the up today. So if you just want to tell your opinion and your thoughts on this.
Okay, yeah. Yeah, I was in that camp too. I was selling up here. I thought it was amazing once it got up above $100 an ounce. That was exactly what I was waiting for, and it even exceeded that. I got up to 121 on the futures
Yeah.
market, which was amazing. This is my base case right now. So I've got these 4 boxes drawn here for silver in price ranges, and just like the red, yellow, and green lines, like where would I be a buyer, right? I'd love to buy down here around $50, and I'd also like to buy $54 to $70, but not quite as much. And I'm not much of a buyer down here, 70 to 92, right? So these are the corresponding odds of I think of us kind of sticking in that price range going forward about 4 weeks or so, maybe a month, right? And I think about 40% of the time here, and I've just adjusted these levels because today we broke out above one of my resistance lines at $92. So there was quite a bit of resistance at $92. It took 2 days to break through it. So here on Wednesday of this week, and then yesterday, Thursday, and today, Friday, we finally broken above it, and the market is still open right now. So we'll see if we can maintain above 92. So if we close the day above 92, then I basically think that we got a 40% chance here of kind of trading in this range, 92 and above, and I'll put all-time highs in there as well, basically above $92 over the next month or so. If we don't and we break down below, then I think there's about a 30% chance that we're in the $70 to $92 range. And I think over the next month or so, there's a 20% chance, 1 out of 5 times, that we hit that we hit $54 to $70. And about 10% of the time, I think we get down here to the 200-day moving average or below, basically at $54 and below. Overall, this is generally forming up a kind of bear flag. So it looks kind of like the uranium equities, not as clean as the uranium equities, but we're just breaking to the upside of this part of the bear flag right there. So it may be negated. Usually when you see bear flags like this, there's about a 70% chance that it's going to break down. This one may not be. So those are my odds right now for silver.
Okay, well, that's good to know. Let's talk about gold now.
Okay, gold. Did the same thing here for gold. Gold's looking really good. I mean, it wasn't that long ago. My odds up here, 5,200 plus, were around 20, 30%. And they're getting a lot better because now we're above 5,200 and we've closed a few days above 5,200, which is absolutely fantastic. So this gold chart is looking much better to me than the silver chart. It's much more constructive. We're making higher highs. And I'm more bullish on gold than I am silver. As far as any real chart patterns, let me go to the 2-hour here, and I think it'll be a little bit easier to see. But you can see that we've got a general trend line up, kind of a triangle pattern right here. And if we go into a little bit more recent price action, you can see that we've had a little bit of a run up, kind of a sideways consolidation here. And it looks like today we're starting to break out. So this pattern right here, when you draw it, is basically like a pennant, kind of like a triangle bull pennant. And within the last few hours today, we've started to break out of that. So I'm pretty constructive here for gold. I like it a lot. I think I don't know that I would be a buyer right now. I would really be a heavy buyer if I was down here. But if you're not invested, I don't think it's a mistake to take a position now. So these are my odds: 50%, 5,200; 40%, 46 to 52; and 10%, 4,000 to 4,600.
I guess I forgot to ask you with the silver and the gold. So those options, at what point do those happen?
Those options. What do you mean?
Like the 40%, the 10%, 50%, what time frame are those in?
Oh, about a month. I
Oh, a
think
month.
I think
Okay.
we kind of live in this range half the time over the next month. And I
Okay.
think we live in this range 40% of the time over the next month. About like that.
Yeah, so for people wanting to get into gold and silver, do you like investing in physical gold and silver, or do you prefer investing in the miners?
Right now, I prefer the miners. And the
Okay.
reason is because gold and silver, the physical gold and silver spot has had a heck of a run. And what should happen most of the time, let me pull up another chart here. We'll pull up the XAU divided by gold. So I got this one from Michael Oliver. And basically what let me pull up the weekly here so we can go way out. Okay, so the end of this chart here is 1984, and this is today. And so what we're seeing is we're seeing think of it like a GDX and an SILJ combined. Although the GDX and the SILJ, they haven't been around that long, so this gives us much more history, right? So this is like gold miners divided by the spot price of gold. And what we can see here is that back in, it was pretty normal from, the 1980s until like 2008 for the ratio here to live in between zero point 0.2 and zero point 0.3, right? Here we are way down here. We're not even at zero point 0.1. So what's essentially happened, let me draw a little box right here. And there. I'll make it white so it's a little easier to see. Oops, where's my little tool? Okay, well, whatever. You can see the box. Basically, as the chart goes up, gold and silver miners are outperforming gold. As the chart goes down, gold is outperforming gold and silver miners. We're at a pivotal point right here on this box. See, I think we're going to break out of this box here in the next couple of weeks. And that's when I think that gold and silver miners are really going to outperform the metal itself. And that's what I'm betting on. So long story
Yeah.
short, I like the miners better than the metal right now.
So what's your favorite silver miner?
Favorite silver miner, easiest beta way to play it is this one right here. This is just the SILJ. This one is very liquid. You can even do options on it. And I have options on this open right now. So I think for most people, this is probably what you're going to want to do because it's super liquid. It's got a lot of the leveraged plays in it. It's got Hecla, Core, it's got First Majestic. The ones that are going to move the most, that's what this one has. Okay, so if
Uh-huh.
you're a gambler, this is the one you want. As far as my favorite silver miner, if I had to pick just one, it kind of depends on what you want. Do you want safety? Do you want like just straight up leverage, like high risk, high reward? I'd say probably overall general, Pan American Silver I like a lot. I think about 30% since they took over MAG of their production comes from silver, and another 70% is from gold. So to find a pure silver miner is pretty difficult. But I like Pan American a lot. Ross Beatty started it. The guy's just a legend, and yeah, I think. And there is the kind of like silent call option that doesn't expire on. They've got it's over 1 billion ounces of silver in the ground that because of political reasons they haven't been able to actually go after. There's one down in Argentina and there's one over in Guatemala. So there is the chance that, if silver gets up to stupid levels, I think politicians won't be able to help themselves and they'll restart those mines to try to, confiscate some of that money. So you do have that, and I don't think that's priced into the company at all.
Yeah, that seems to make sense. If silver goes up, those politicians will want to wet their beak too.
Oh,
So
of course, yeah, they got to steal from somewhere, and what's better than stealing pure money itself,
Yeah, that's true. So now that we discussed silver, what's your favorite miner for gold?
Favorite gold miner? Well, I like that. It's not a miner, but it's a. I like the royalty play we talked about, the nation's royalty. Although that's extremely risky, but it could be super high reward. If I had to pick a miner, probably Agnico Eagle. They
Okay.
they're the biggest, the best. Um, Pay a little dividend. I mean, the price just keeps going up. I would probably start with an ETF like GDX, and then right after that, I would buy some of the big gold royalties, and then after that, I would probably step down to Agnico Eagle.
So you mentioned dividends. Do you like and prefer stocks that pay dividends?
It depends. I wouldn't want a dividend from Nation's royalty because that's not what the bet is. Yeah, I like dividends. Oil companies. Yeah, I don't know that I really prefer one over the other. Although as I'm getting older, I do notice that I do have more dividend paying stocks. Probably just a thing of getting a little longer in the tooth and seeing the light at the end of the tunnel when you can basically just collect that check every three months and go fishing. So yeah, I do like dividends. Yeah, but not always.
Okay. So one thing I also want to talk about before we end the video was the real estate market. I think you had a chart for that. I just want to see if you think it's a good time to invest in real estate right now, and what area, like what market in the United States do you think would be a good market to get into?
Well, if we're going for rental properties, I would say avoid California, avoid New York. You want to go to somewhere where they're friendly with landlords, and those states are not it.
Yeah, I
uh,
agree.
yeah, here's the general price of a U.S. home, priced in dollars. So this is going back to 1963. Average U.S. home price was 17,800 back then, and today we had a little run up here up to 100 and I'm sorry, 400 and something, 440,000, and today we're at 405,000. So we could see that the price of homes priced in U.S. dollars is generally going up. I don't necessarily think that homes are more valuable now than they were back then. I think what's happened is the money supply has gone up, so it takes more of those dollars to buy the same home. So if we take homes and instead of pricing the average U.S. home in dollars, and instead we price it in gold, we see a very different chart. And so this chart goes back to 1975, and this is the average U.S. home priced in how many ounces of gold would it take to buy it. And so here at the bull gold and silver market in 1980, the peak, it took 73 ounces of gold to buy one U.S. home. Then fast forward here up to the turn of the century, and it took 700 ounces of gold to buy your average U.S. home. And then fast forward again to the 2011 peak, and it took 116 ounces of gold. And then just here, and remember this number here, 273, that's how many ounces of gold it took to buy the average U.S. home in July of 2022. So not even 4 years ago. Today, we're at 77 ounces. So homes priced in gold only cost 28% of what they did just a few years ago. Okay, now we're going to do it in silver. So this is the average U.S. home priced in ounces of silver. Same chart going back to 1970s, right? 19,000, all the way down to 1,500 ounces of silver could buy your average home in 1980. Fast forward, boom, all the way up to 44,000. And then 2011, 4,500. And just a few years ago, in July of 2022, it took 25,000 ounces to buy your average home. And this is where we are today. The housing market has crashed, but people are pricing it wrong. They're looking at it in dollars, and they should be looking at it in real money, right? 4,300 ounces to buy your average home today. That's 17% of the price that it was not even 4 years ago. Here's the same chart in copper. How many pounds of copper to buy your average home? 4 years ago, 140,000 pounds. Today, 67,000 pounds. It's half the price it was before. Here's homes priced in platinum. So this is how many ounces of platinum for a home. 4 years ago, 550. Today, 171. It's a third the cost that it was just 4 years ago. So I think the housing market crash is happening right now, and we're watching it. But people are being deceived because they're pricing it in dollars, not in what we should be pricing it in, real money.
Wow, I never really thought of it that way. That's from what you show, it definitely has crashed quite a bit. So around 2008, could you tell us how much it was, how much silver was in 2008 when the crashed in dollar terms?
What silver was in 2008?
How many ounces of silver did it take to buy a house in 2008?
In 2008, it took right here 26,000.
Okay. So it did go quite a bit down during the recession as well.
Mm-hmm. Yeah, we may not be at the bottom, but compared to, I mean, think about it. Like that would be like $1 million home only costs 170,000,
Yeah.
right? And that's exactly what happened. So if you were stacking here, you should be buying homes here.
Yeah, I think you're right. And I think we might see more people who have gold and silver start turning that in to buy real estate.
I think they should. If you look here at the 10-year yield, this is essentially the price of money. And this chart goes back to when the Federal Reserve was, when it came into existence in 1913. And so the 10-year yield is essentially what the world looks at as the price of money. If we zoom in here on the daily chart and go back about half a decade, we could see that this white trend line has just been obeyed, but we've been hitting it more times, and we're just breaking out here or breaking down in the last few days. So I think interest rates are going to go down. I think mortgage rates are going to go down. And I think the price in dollars of homes is probably going to go up. If interest rates drop, then the price of homes should go up. And people will think, oh, the crash hasn't happened yet. But gold and silver are moving up in price faster than homes are moving up in price, meaning that ratio chart we just pulled up is going to continue going down faster. And I think people could really take advantage of this. I really do. I think that, if you've been stacking, like this is your moment to strike. This is when you should be buying those rental properties. And you don't have to put down 4,300 ounces to get the whole home. You just got to do 20%. And as long as that's cash flowing, then you can get 5 homes for the price. Does that make sense?
Yeah, that's definitely true. You can get it financed, and as long as you're getting more in the rent than you are at the loan, then you're still making a profit each month. So I think you're definitely right about that. And I'm glad you mentioned interest rates because that was going to be my last question is what do you think interest rates will be by the end of this year? And also, what do you think the real inflation rate would be for the end of this year?
Oh man, I stopped paying attention to the CPI a while ago because I did the math myself, and my inflation rate is like close to 10%.
Okay.
And when I look at, my Costco bill at the end of the year, and when I look at, just the price of insurance and all that stuff, my inflation rate is 10. So they can tell me 2.3 or 3.1 all they want. And I just completely disregard anything they say. So I don't know. I'm not the guy to ask on that. Interest rates, I could look at a chart and it looks to me like this is going to break down. And I'm kind of glad that we're recording today because this is literally the breakdown happening in front of our eyes. And so I think what fund managers are doing here is they're buying bonds. I think they're seeing the S&P 500 chart here starting to break down. This thing has just gone sideways, right? And it hasn't done anything. So this is going back to October of last year, and you haven't made any money. It's that red line right there is right where the price is today. And going back there, you're at the same. Yeah, maybe they picked up a couple little dividends here and there, but people aren't stoked when they're looking at their quarterly, report from their fund manager, and they're like, "How come you haven't made any money?" But yet Uncle Tom over here is telling me about like his silver and his gold is moonshotting. Like, what are you doing? I think they're trying to rotate into these and just get some yield, which is why the yield is going down. The more managers that buy bonds, it drives the yield down. When fewer of them buy it, the yield goes up to entice them to buy the bonds. And I think we're seeing fund managers rotating into bonds right now because they see the general markets rolling over. Gold and silver is our whole world. But for, most people, that's not the case. They don't even know about it. So their instinct knee-jerk reaction, I think, is going to be to move this into debt that pays an interest. And I think that's exactly what they're doing. So where is it by the end of the year? I don't know, but my guess would be lower. There is a decent amount of support I see for the 10-year yield here around 3.75, so 3.75. And there's also quite a bit around here, around 3.3, 3.35. Boy, after that, now you're starting getting into the weeds. We got to hit those ones first, but yeah, I see this moving down.
Yeah, that's definitely some important information. I wanted to take the time to share Steve's website so you can claim your free and premium newsletter. So I think this is great. You get a lot of great information from this newsletter. So basically, all you have to do is go to his website, stevebartonmoney.com/newsletter, and then you just type in your email, then you can subscribe to that. So you can get a lot of important financial tips and a lot of great information on the markets and precious metals. Would you like to tell the viewers a little bit about your website, Steve?
Yeah, I've got right there. You got it up. Thank you for that. I appreciate the plug. I do a free newsletter. So whenever I interview someone, I basically give maybe you don't have time to watch the entire 1 hour interview, but you do have 3 minutes to read my basic, points and summaries of what the biggest takeaways that I learned from the guest. And then every weekend, I have a free newsletter where I go over basically what I learned from all my guests during the week, and I summarize the lessons in that, and then I usually have an actionable thing in the final word down at the bottom of the newsletter, where kind of where I see the biggest opportunities. I also have a premium newsletter that's for guys that are a little bit more serious. I've also got a technical analysis series where I go over what patterns I'm looking for in the charts, how to spot these trend lines, how to spot the different patterns. It's all on the website. And I also have the YouTube channel where, I interview guests like you do. And you can find all that on stevebartonmoney.com.
Yeah, there's definitely a lot of great stuff, and you can learn a lot from subscribing to this newsletter. So, well, I'd just like to thank you, Steve, for coming on the show and providing all this great information on so many different markets and commodities and stocks. I think the viewers found that really helpful. And I would just like to thank all the viewers for watching this video. If you could please share with all your friends so we can get the word out and like the video, that would be greatly appreciated. And thank you again, Steve, for coming on the show.
Thanks for having me, Alex. I appreciate it.
Thank you, everyone. I hope you have a good day.